stock of the day, because I'll talk to you about this one, Mark. You're feeling pretty good that this was taken out of the fantasy portfolio by the investment committee after yesterday.
And I'm a fan of judo, and I went back and had a look, and I went
You've probably buy on judo a lot.
Oh no, and I still quite like it, but the But I was looking at the transcript and I went, oh God, I hope I wasn't. I hope it wasn't the guy saying buy. I couldn't, and we ended up swapping it for SiteMinder or EOS, which are both up around about 30%. So that was a very fortuitous swap, I've got to say. But look, it's all about trust with banks, particularly. I still like this thing. I mean, realistically, at 91 cents, it's trading at half book value, which is extraordinarily cheap, and 8 times forward earnings and things like that. Their net interest margins are improving, but they did a review of their of their credit book and their individual clients. What was it, 3 or 4 months ago? And then now they've come back and gone, well, actually, it's the bad debts are the loans in arrears is 3 times higher than what we thought.
Yes.
And that, you can't, if you're a bank, you can't do that.
No, you
just
can't.
cannot
and
do it.
That's exactly why the market is punishing it so hard at the moment.
It's not,
and because it had a trading update not so long ago. And while they tried to say that it was about the macro and that their provisioning will remain in line pretty much with what they put in the third quarter, it's this cost of risk. And this just sort of destroyed the investment thesis, right?
One of the positive things about it is that the 3 businesses that went under weren't correlated. So like one was a blind and curtain manufacturer, one was a financial planning customer, and the third was in construction. Okay, so like looking at that, it's not correlated, so there's not a trend that's going to happen with that. But certainly when you look at that deteriorating and those loans worth about $75 million, that's a big hit to the overall bottom line. And those provisions, they increased their provisions by 20 million, and they expect now the cost of that risk could be up around about 122 million. So it's not a great look for a small bank trying to compete against the big.
Well, and if they literally had telegraphed it, even in a small way, 3 months ago, the stock's probably 110, 120 or something like that. But it is, as a bank, this is like cardinal sin number 1 in terms of updating. And particularly because, these guys traded a much better, they're higher CET1 ratios because they know that these bad debts are coming along. They're always a higher NIM and higher profit margin than the bigger banks. And because they need to have that buffer, because small, medium enterprise lending is, realistically, is far more risky than, say, mortgages, etc. So, and look, when we had particularly the budget is when we were definitely out of banks, particularly Australia-wise, in terms of owning the stocks, because if housing starts to come back or any sort of doubt, so it was probably for other reasons, but you would be really annoyed if you're a shareholder, because that's just getting blindsided like that, and it's going to take a lot of time for them to build the trust. I'm going to say, look, if you've got it, hold it, because long term, there's still only 2% market share of that SME market. They've just got to take small bites, and they grow and they grow and they grow, and this could end up being one of the better buying opportunities, but this is not going to bounce back tomorrow. It's not going to bounce back next quarterly update or probably even next earnings. I think this will take a year for them to build back confidence, but if you're a long-term value investor and you're willing to take on the long-term bet and stick your head in the sand and
so you'd say buy some more down here.
But there's no rush.
No, I agree.
There's no rush.
Most brokers are cutting forecasts by 8% this year and another 15% next year, right? So this is, and the problem is trust, but it's also the contagion effect. Like, what else is it? It's a cockroach. If you see one cockroach in the kitchen, you know that there's plenty more underneath, right?
Yeah.
And that's the problem with this. It's a sell from me.
Yeah.
Yep. Even we've got Citi and Jefferies weighing in. Citi has it a buy now on valuation grounds. I think Jefferies kept their buy rating on the stock. But Judo selling further selling today in the wake of yesterday's 40% fall. Okay, so that's a stock of the day, a hold and a sell.